Kelsey, well, you know what? I don't want to butcher her name. So I'm going to bring her on to introduce herself from Horizon Trust because she has a gorgeous name. So I'm not going to butcher it. So,
Hi.
Kelsey,
Yes. Hi, ladies.
how are you?
I'm good. Thank you. How about you guys?
Not
Good.
bad, not bad. How do you pronounce your last name?
It's Guinness, like the beer, but not spelt like the beer.
Ah, see,
Everyone
that was.
has minds.
I was thinking, guys, so I was like, yeah, don't even say anything.
Yeah,
But
I thought like the G was pronounced like a J. So
Yeah.
yes, okay, perfect. So before we dive in and Kelsey starts talking, we're just gonna share our disclaimer with you guys.
yes. The following information is for educational purposes only. Please do your own diligence. We do not provide financial, legal, or professional advice. You guys, every time that we talk, it's from our experience. And get yourself someone certified like Kelsey here, and she'll take care of you.
Right. All right, love it. So let's dive in. So for those who are still new to what we're doing, this webinar is all about first, like the right way to invest in real estate using your retirement account. I know a lot of persons always hear, oh, from investors, you need to invest in your retirement account, blah, blah, blah. You can earn wealth, blah, blah, blah. But that's very general. So today we want to just dive in. What is the process? If they should get a custodian, if they have a 401k, solo, and again, so technical. So that's why Kelsey is going to help us
And
with that today to clarify a few things. So, Kelsey, to dive right in, what can you explain the process for someone who has like a retirement account and wants to invest in real estate? Can you expound in terms of it's a 401k, solo 1k, Roth, if they can do it or not?
Any type of retirement account would be allowed to invest in the self-directed market. So essentially, we are just another custodian like Fidelity, Charles Schwab. The only difference is that we allow you to self-direct your money. All that means is that you can invest retirement funds in alternative assets, including real estate. So our primary investor, I would say, is in the real estate market, whether it's physical real estate, private money lending, or REITs. Those have been the most popular with us.
Okay. So when you say retirement account now, let's say someone has, if they're self-employed, that will be a solo 1k. Can they use that? And can you guys assist them with investing as well?
Yes, that's actually a lot of our client base has solo Ks because a lot of them are in the real estate themselves within their own personal life. And so
Mhm.
they are a great candidate for a solo K because most of the time they're doing wholesales or flips. And those are the type of people that we typically take on because most of the time they're not aware that they can even have a 401k on their own with a solo K, and that's an option for them as a business owner, as an entrepreneur. Anybody who has their own business can really qualify. They just need a few requirements to have that type of account. But to self-direct in general, if somebody is looking to do this, they can do it with a traditional IRA, Roth IRA, rollover IRA, simple IRA, SEP IRA, 401ks, TSPs. I mean, you name it, as long as it's a retirement based plan, you can utilize that to invest in this. The only catch is that you have to be no longer employed by whoever's sponsoring the company. So, for instance, if you are a W 2 based employee and you're looking to use your retirement plan, if you're still employed with that company who's sponsoring it, those funds are not eligible to use. You have to wait till you're no longer employed with them.
Okay, so I'm glad you brought that up because I realize a lot of persons always mix that up as well. So let's say you have your W-2, so you have your 401k,
Mhm.
but now you're also doing real estate investing full time. Can you also set up a solo 1k as well?
You
Oh,
can.
okay.
The only difference is your contribution limit. So you can have as many plans as you want, just like you can have a W 2 based employer job with a 401k at multiple companies and
Mhm.
multiple IRAs. You can have multiple accounts. It just depends on your contribution limits. That's the only restriction, is that you can't go over a certain limit between all the accounts as an aggregate.
Okay. Um, is there any way to dive a little bit deeper into that limit, the restrictions that you're talking about?
Yeah, so the total for instance, a solo case, so somebody who is an entrepreneur, it's 66,000. But the limit that's restricted would be the employee contribution, which is a max of 22,500. You do get a catch up if you're over 50 of an additional 7,500. So 30,000 total if you're over 50, and that's the limit you can't breach.
So it's six for some persons who are still like, okay, there's so many numbers. The 66,000, is that for the year?
Yes, the calendar year. And it goes up every year usually. The IRS does increase it to account for inflation. Um, right. But yeah, 66,000 is for 2023.
Okay, perfect. And then let's say someone's ready to walk us through the process. If I have a 401k and want to invest, scrap that. Let me start over. If I am a private money lender and I have a 401k and I want to land on a deal, walk us through that process if they go to Horizon Trust to help them set that up.
So if you wanted to speak with us one-on-one, we do offer one-on-one consultations, and that's when we really dive more in depth with your own personal situation, because everyone's different. So even if you have X, Y, and Z accounts, it could be different based off of the type of business that you're doing or what you want to get involved with. So I do recommend just reaching out to us to get that. It's never, when you're speaking with us, it's always going to be educational. We'll always provide the best education that we can based off of your personal situation. So if you reach out to us and you have a consultation set up, it'll pretty much be an hour-long conversation unless it's cut short. And basically, we'll go over what you have existing, a good structure for you based off of that. And from there, if you decide to move forward, typically we'll walk you through our online application process. It's very simple. It's a easy process. All of our forms are completely online. So if you ever need to access them, they're directly on our website, which is just horizontrust.com. But if you move forward, we'll walk you through our online application. From there, we'll have your account set up within 24 hours. As soon as it's established, we have a transfers team that will actually assist you with moving your money. So you don't have to stress about the transfer from, let's say, Fidelity or Charles Schwab to Horizon Trust. We'll work with you to make sure we receive those funds within a timely manner. And then once we receive your money from that resigning custodian, it's just a matter of you being notified and knowing how you want to invest the money. So let's say, after this webinar, we speak with people and they want to invest as a private money lender with you guys. If that were the case, because we have a working relationship, it'll be a pretty easy and seamless process because they'll be working with you on how much they have in their account, which they'll know at that point because we would have had that conversation with them. They get to tell you, hey, I have 40,000 to invest. They'd work with you personally, and then you and I would work personally on making sure they get funded correctly, just like we did with other clients. So it's honestly a pretty seamless process, mainly because we do have a working relationship. So we have that instant communication and we can make sure it gets funded quickly. But it's honestly as simple as that. I don't want to say it's that simple, but it really is.
Like the first time we worked with you, like we didn't know who you were. It was our private money lender introduced you to us. And I think just the way how your communication was amazing, like you were on top of things. You fully outlined to us, okay, you guys are the borrowers. This is what I need for my person, which was a private money lender. We followed your instructions because they were super clear. And then we will send it back and Kelsey will just respond just like that. If you know that if she didn't respond by the end of the day, she normally would. And then she'll be like, okay, this is good to go. This is what's going to happen next. And I think I love that about you that you did. And that once the funds are wired, funds have been wired. And it's like easy peasy. And then we'll just say, Kelsey, funds received. And I think that with us communicating makes everything so much easier. And the fact that you guys do everything online, that makes it so much even better.
Yes. I think the only holdup with that one client was, I think it was the title company or closing.
Yeah.
They were dragging their feet. And that was the only reason it took longer.
You guys are ready to go. We're like, yeah, it's title.
Yeah. So we get asked a lot and we have our own perspective, but I wanted to know out of your perspective as a custodian, what are the benefits of investing from your retirement account instead of just leaving it in retirement?
Well, it just gives you the option to invest in alternative assets. So if you have, ultimately, all we're doing as a self-directed custodian is allowing you to do the same type of investing that you're doing in your personal or business life, but in an account that's not paying taxes. So when you invest with these funds, so when they invest with your private money lending deals, for instance, if they lend it out at $40,000, and their profit is 20%, their full profit is going back into their account. They're not paying any taxes on that profit. So it's super easy to compound your money when you're not paying taxes on the investment.
What if, and this is my follow-up question too. So let's say they're doing that approach as a private money lender. So they're pulling money from their retirement account, doing a private money lender. They get their promissory note, mortgage deed, getting interest, and it goes back to the retirement account. What
Mhm.
if it's a case where this private money lender now owns equity in a deal instead of being a lender? Do they still pay taxes on that? Is something to look out for?
No, because the equity is going to still be held in the retirement account. So,
Mm.
their personal name is never going to be listed on any of the paperwork. It's always going to say, just for example, Horizon Trust FBO, which is for benefit of the client's first and last name and their account type. So, even though, because when they're lending with you, they're usually having equity with their retirement account, right, at the end of the deal.
Yeah.
So the equity would be held in their retirement account's name. So, for instance, that one client that we just did together that we were talking about earlier, I believe she has equity in that property
Yeah.
once it's paid off.
Mhm. Yeah, she
So,
would have that.
exactly, any of that profit's going to go directly back into her retirement account.
Tax free.
Mm-hmm.
It's funny because I wanted to bring that up because, and maybe you're not, you have an idea about this. I've heard about the, is it the UBIC tax or cubic tax or something like that?
Mm-hmm. Unrelated business income tax.
Yes. Can you touch a little bit about that and how it's in relation to retirement account?
UBIT is really when you're using your retirement based account that's not paying taxes on active based businesses. So you'd see it more when you're leveraging debt. But acting as a private money lender, so it's different because you guys are typically doing some type of creative financing, right?
Yeah.
It kind of voids it because
Okay.
you're not taking on any debt really.
What if it's not creative? What if it's a, let's say it's the lender is doing lending money on a fix and flip project?
Because they're primarily acting as a lender, all they're doing is being a private money lender, so they're not really leveraging any debt.
Okay. Okay. That makes so much sense. See, it's because I've heard that and I was like,
Yeah, it's really more if you're doing more like direct wholesales or fix and flips directly on your own from the account, because that's an active based business. It's not passive income.
yeah.
That's where if you get audited, you would you would be dealing with UBID. So there is, for instance, if you're looking at purchasing a property, you can leverage a loan, but the only type of loan you can have is a non-recourse loan, so that your retirement account isn't the one that's held liable if anything happens. It's the property.
It's a property.
And can you invest in your own properties from your own investment account?
No, so that's self-dealing. Okay, so there's workarounds. Okay, there's workarounds with that, and it is based off of everyone's individual circumstance. So, for instance, you were mentioning solo Ks earlier. Solo Ks are also known as 401ks, solo Ks, uni Ks. They're all the same thing, but everyone likes to come up with different terms for them to make it sound more unique or a special product that they service, right? And so, with that type of account, you're able to borrow 50% of your market value, maxing out a $50,000 loan. So if you have a 401k with a previous employer that you're rolling into your own plan of, $30,000, you're able to leverage $15,000 of that for personal use. Now, it needs to be paid back within a 5-year period. There's no prepayment penalty if you were to pay it off sooner before that year term is up. The interest on it would be based off whatever the going prime rate is at the time of you taking it. So, as you all know, rates are astronomically high. Prime rate, I think last I checked, was 8.25%. But because you're borrowing from yourself, 8.25% and the principal is being paid back to your own retirement account.
Mhm.
So when you borrow that personal loan, that's when you can use it for personal use. But if you're strictly investing, if you're just investing the money that you have in the account, you cannot personally lend to yourself. That would just be a prohibited transaction.
Guys, if you are clear on what Kelsey just explained, because we've seen this a lot in our communities, persons asking in different Facebook groups, drop a one in the chat if you guys are clear. If you want her to go over it again, just say it. My skull is very thick, and that is totally fine. If your skull is thick too, sometimes hearing things twice is super helpful, so you get clarity. And I love how Kelsey explained things as well, because she really breaks it down. Because a lot of times when you start going into details with things, it's like it seems so overwhelming because the information is so new and it seems so technical. So it's like, the emoji when your brain is like exploding, and then everyone's like, okay, I don't want to do this again. I changed my mind. This is too overwhelming. So that's why we're just trying to break down things as much as possible so persons really understand. Carlos.
We have a question too. Derek wanted to know if about the, you know how you said the yearly, how much you can put into your retirement account yearly. Do you have that information on the Horizon website?
I don't know if we have it on the website directly. Honestly, if you Google IRS contribution limits for solo Ks, it's going to be right there for you, and it'll give you the breakdown.
Right
And
there.
I can go over the contribution limits as well, and how they kind of work if you'd like to delve into that deeper.
No, definitely. Go ahead before we go to Carlos' questions. You're good.
Yeah. So when you're contributing to a solo K or 401k plan, the limit is 66,000 if you're under 50. If you're over, you get an additional catch-up contribution of $7,500. When you are contributing to your solo K plan. So this is the thing that people get hung up on or are confused about. When you're making a contribution, the only number that really matters or applies to the contribution is the amount that you're paying yourself from your company. So even if your company is making $100,000, $200,000, $300,000, but you're not paying yourself a salary of any type, you cannot make a contribution to your own solo K plan. So just to give you some numbers to make it easier to explain, let's say your company makes $100,000. You pay yourself a reasonable salary of $50,000. The only number that matters in the equation is the salary you took of $50,000. So from here, there's two types of contributions you can make. There's an employee contribution and there's an employer contribution. The employee contribution is made up of, it's a max of 22,500. That's also where you get that additional catch-up contribution of 7,500 if you are over 50. This just means that if you've paid yourself up to that much, you can contribute a max of that much. So based off a $50,000 salary, you can max it out at 22,500 plus the additional 7,500 if you're over 50. The second contribution is an employer's contribution. That's going to be 25% of the salary you took. So 25% of 50,000 in this equation, which is 12,500. So in total, off a $50,000 salary, you could contribute a total of $30,000 to your own 401k plan.
And the employee just do 25 and you just do the remaining balance.
But
Yeah,
that's
hitting
right?
60,000.
Okay. And then, so Carlos is asking, so if I get a loan for 8%, lend it for 15% and make the spread.
I think what he's saying is that if he does like a loan for 8%, but he's gonna pay his lender 15%, can he make that spread? Carlos, correct me if I'm wrong on that, but I think that's what he's asking.
Yeah, very here, Carlos, with the spread that you're asking, because I'm assuming the spread is your profit. So you
Mm-hmm.
can put that in the chat and let us know.
And if he's referring to the 8.25% that I mentioned earlier on the personal loan, yes, he could go ahead if he wanted to. He could go ahead and take that as personal profit as long as he's paying back his loan with the interest and then pay off the loan. He could keep that as personal money because that's non-retirement based. And then, so
I
yeah,
think
categories.
I think that's the question he's asking because we've had this conversation before. If his loan is 8%, and that's what's in the agreement for his retirement lending portion of it, but he charges someone 15%. He just needs to pay back the 8% and keep whatever in his pocket.
Mhm.
And whatever he keeps in his pocket, that's what he's going to get taxed on.
Yeah, because that would be taxable income at that point because it's
Okay.
personal funds.
Okay, yeah, that was the question. He just put it in there. He's like, if I take the loan against 401k for 8% and do a deal on the side for private lending at 15% and keep the spread. Yeah, so you just keep the spread, Carlos. We have Edgar's asking, consider I don't pay taxes now on my SDI or in self-directed retirement account. If I buy a house using this money, I could not benefit from depreciation of that property, correct?
Correct.
So correct, Edgar. See, I'm learning. I'm learning
Me
this.
too.
It's crazy because we hear so many different stories, scenarios. Google tells you so many different things as well. But it's always good to clarify things like these. I'm here thinking, I'm just pulling up on my questions because I know a few
Okay.
persons able to make it. They're like, can you ask these questions for me? Go ahead, Betsy.
So, what type of retirement accounts can you use? Is this like all of them? Is it only some? What type of accounts can we use to invest?
Pretty much anything. So no matter what type of account you have, whether it's there's IRAs, individual retirement accounts, and that would be either traditional. You'll see commonly if you have a 401k and you rolled it over into another company that it's called a rollover IRA. That's basically a traditional IRA that's eligible. You can do Roth IRAs, simple IRAs, SEP IRAs. When you go into the employer sponsored plans, more along the lines of 401ks, it would be 401ks, 401as, 403bs, TSPs, 457bs. I mean, you name it, you can probably roll it over into an eligible account.
I love that you just brought up all those. The common, if you could do like a quick differentiation between 401k, I know we touched on it earlier, 401k, solo 1k, and Roth IRA.
Mhm.
Those are thrown around as the same thing. So can you clarify the difference between those three?
Yeah, so the two you really want to compare is the 401k and the solo K. They're basically the same thing. The only difference is the name. So the name itself, solo K is just a term that they use for somebody who's doing a 401k, but they're the employee and the employer. They're self-employed. It's their business. Their LLC is sponsoring their own 401k plan, but it's the same thing at the end of the day. It's the same issued account. Roth IRA versus 401k and solo K, it's an individual retirement account. It's an IRA. It means that you set it up on your own, you contributed to it on your own. That's it. And then being that it's a Roth IRA specifically of the IRAs, that is an after-tax account. So that just means that anything that's growing from that account is tax-free upon distribution.
Gotcha. No, that is scary.
It's a lot of information too. So
It's a lot, but
if I need to repeat myself, let me know. This has been 8 years in the making for me, so I get it.
Like if anyone's not asking questions, like what if anything that you say, I know sometimes it can go over my head. I'm asking again because some persons might be afraid to ask, but I want to ask so it's broken down for me to understand. One question is, let's say I borrowed money from my retirement account. I became an equity partner. But let's say in 2, 3 years, I want to liquidate. I want out of that partnership and I want my money back. How can Horizon Trust like facilitate that transaction to make sure that the funds goes back to my retirement account? Because I know it that you have promissory note, you still have the mortgage deed, you still have an operating agreement and an LLC. How can you guys handle that portion of it?
Well, at the end of the day, we are still just a self-directed custodian, so we are following whatever you guys tell us to do. If the client wants to liquidate, I mean, that's an agreement that would be, I guess, more so on their end with the person they've done the deal with to
Yeah.
see what they're going to be cashing them out at, and then the funds would just be returned back to their retirement account as profit. That's it.
Okay, perfect. We're gonna touch a little bit on because some persons might now wondering what paperwork is needed. Have you done any transaction where persons are invested in real estate, but they have other documents apart from a promissory note or mortgage deed? And what would that case like?
So like if they're purchasing a property on their own with their retirement account.
Yeah. So what it's for their own or lending? Because I know standard. If they're lending, they would have the promissory note or the mortgage deed. But have you ever seen anything where additional documents are required? If yes, what are some of those documents?
No, if you're strictly private money lending, it's really just going to be the promissory note that we need to have. That's mandatory on any type of private money lending. And then the security deed or the deed of trust, if it's secured by anything. If it's an unsecured note, then it's just the promissory note. But typically, you want to make sure it's secured.
And then one thing I always like that you guys do, and whenever we're working with other lenders who don't have their account set up with Horizon, is that we always ask them, hey, find out from your custodian how the paperwork should be structured. Because we realize a lot of custodians require different things, and it doesn't make sense as the borrower. We get the attorney to draft all the paperwork. Then when we send it to the custodian, they're like, this is missing. That's not how it should be done. So I think I love that the fact you guys always state these are the things that should be on the paperwork before we even start the paperwork process. So can you just, for those who don't know, a lot of persons don't know, just share with us like what needs to be on the paperwork if they have their account with Horizon?
Yeah, strictly with Horizon, the only thing that differs from them doing the investment with their retirement account versus their personal or their business is going to be the name of the investor or subscriber and the address. So if the name of the investor is listed anywhere on the paperwork, which it will be, it'll always be Horizon Trust, FBO, their first and last name, and then their account type. So for instance, if it's my account, it's Horizon Trust, FBO, Kelsea Gines, IRA.
Yeah.
Oh, so
Then
I do have a question with that. Have you ever seen a retirement account owned by the trust?
Yes, where like the beneficiary of the retirement account is a trust.
Yeah.
Yeah, that's common. For instance, it's on our application if you're going to list a primary beneficiary. If you don't want to list an individual because you have, for instance, a revocable living trust set up, you would just list the trust instead. It's not required, but some people have trust set up and they prefer to have it established that way.
That's perfect.
okay, and then with
Structure.
Sorry.
I've been
with
thinking
the
a lot about that structure. So would there be any differences when you're going to lend from that?
No.
no.
Mhm.
Okay, so let's say you have all the documents like uh, Horizon Trust, FBO, that thing. The mailing address that's used on the paperwork, is it the mailing address for Horizon Trust or is it the lender's mailing address?
It'll be Horizon Trust address. So, going back to what your original question was, it'll be the name of the subscriber will be different, the title I mentioned earlier, and then the address will be Horizon's physical address, which is also directly on our website.
Perfect. So, and then let's going back to getting more into details. I know when making payments to that lender's retirement account, the borrower is sending the funds directly to Kelsea Gines FBO account, and it's the routing number, all that stuff, and you're still using Horizon Trust mailing address.
Yes. Yeah. So whether or not you're sending back via ACH or a wire or a check will get sent directly to Horizon because you listed our address on there as the return. And then whenever, for instance, you guys, or if a client's doing the investment that's outside of investing with you guys, because it, like I said, you already have our information. So when you're sending money back for the investment, you already have our accounting information. But if somebody were doing this with another individual that's not, partners with us per se, we would the client would reach out to us directly for our banking information, and we would just send it to them via email so they could provide it to the person that needs to send them the funds.
So at no point does the lender use their personal address on the paperwork.
Never, no.
Okay.
Unless it's
Right.
like a personal questionnaire
Okay.
where they're listing that they're, accredited investor and they have to list personal information. That's really the only time it's going to be listed on there.
Okay, perfect. Carlos is asking, is there any limit to the amount of loans you can take against the retirement account?
So if you're referring to the solo K, the 401k, when you're taking a personal loan, yes, there is. It's two within a calendar year with an aggregate of 50% of your market value, maxing at $50,000. If you're considering private money lending and strictly just investments out of your account, so where you're not taking any money personally, there's no limit. You can have $100,000 in your account and have $10,000 out at a time. You can use 100% of the funds in your account. There's no restriction there, and there's no amount of time that it needs to be returned back to the account.
Good
Uh,
question.
I'm like, right. I like now the fact that Carlos just brought that up. My next question is for us, and guys, we're just sharing the experience, and this is why we like working with them. On average, how long does it take? Let's say paperwork is good. How long does it take for Horizon Trust to wire funds to title?
We say 1 to 2 business days. That's our typical processing time, as long as the paperwork is in good order.
Okay, perfect. That's a
So
good question.
we always like to say, if you have an idea of an investment, if you have somebody that you're working with at Horizon directly, or if you want to just email our operations team, which is just operations@horizontrust.com, send in your paperwork ahead of time and say, does everything look good for me to actually submit this?
Mhm.
Because you don't want it to be 1 to 2 day processing time. You submit your paperwork, but you didn't list any of the information that I mentioned earlier for the subscriber's name and the address. Now it's going to get kicked back, and now it's going to be another 1 to 2 day processing time.
Take notes, guys. We have a question here. You also can create an LLC owned by a SDIRA, and then all transaction will be handled by the LLC, correct?
Yes. So what you're referring to, Edgar, is a checkbook LLC. You might see it around as an investment LLC, checkbook LLC, SDIRA LLC. I mean, like I said, people just come up with creative names for the same type of product. At the end of the day, you're just creating an extension of your account at that custodian. So if you did that with us, for instance, which we typically set up the LLCs for our clients who are looking to have a checkbook LLC, but basically it's an extension of your account at Horizon. So what we're doing is we are getting the money from your previous or resigning custodian to Horizon. From Horizon, you're able to self-direct that money directly in your account. If you want an easier process or a more seamless process, you could then have the money wired to a business checking account. The business checking account is going to be owned by the LLC. The LLC's member, so the owner, is going to be your retirement account, that same verbiage I mentioned earlier, Horizon Trust FBO client name account type. And then the manager is yourself personally. So as long as it's set up like that and your operating agreement lists the proper verbiage to be able to invest through that, we would then send your money to that business checking account and you would operate it as if it were your own business. However, you want to follow and abide by the same rules as if the account was still at Horizon, because all this is an extension of your account. All you're doing is adding a little bit more asset protection to yourself, because instead of having to list your retirement account information on the paperwork, you're listing a business or an LLC's information. And then you have quicker processing times, because if you find a deal same day, you can wire the funds out whenever you want or write a check on the spot.
Wait, hold up.
I know.
I saw the reactions.
Yeah, like, can you repeat the last part again?
Yeah, so having that checkbook LLC allows you to basically operate it as if you were your own business. So you can wire out the money same day because it's in a bank institution that you choose. So the money is now being held at Chase
Yeah.
versus Horizon Trust for you to invest that way. That's basically what it allows you to do. And this LLC that we're referring to doesn't file a tax return, so you don't have to worry about an additional expense there, because it's passive. It's going to be taxed disregardedly, so it's just a pass-through entity. It's like I said, you want your operating agreement to make sure that this is known as a LLC housing retirement funds, so that it knows it's not filing a tax return. You do have to pay, to keep and maintain the LLC, and you still have to foreign file if you're purchasing physical properties in other states other than the one that it's established in. But it's really a matter of, what do you care more about, fees or time.
Yeah. Man.
Because at
Man.
Horizon Trust, we don't have any transactional fees. So, I tell our clients, if you're strictly looking at private money lending, then a great option is just invest directly out of your account at Horizon. There's no reason to take on the additional LLC fees if you don't need to, if it's going to be a really passive investment. But if you're looking at purchasing a property and, maybe you need to pay the gardener or you need to pay somebody to fix this and that, it'll be easier to do that with a checkbook LLC than it would be to email the invoice to Horizon for us to send out the money to them.
That is smart. That is smart. That's Edgar. That is like, whew. See, I tell you, I am learning.
I know. I'm so excited. I'm so
I,
excited.
I'm learning. It's like I need to set up a solo K. I've been meaning to do it, and I'm guilty of it. And I've been saying that since maybe last October, since I joined Sub Two, and I think what was his Greg?
Great. Yeah.
He did a Zoom with Pace, and from that Zoom, I was like, okay, I get it. I'm gonna do it, and I never did it. So, I'm,
It's life.
Yeah. So, what are the potential tax advantages or disadvantages of investing real estate through a retirement account?
Tax advantages would be that you're not paying any taxes on your profit. So I like to say if you are doing business now or if you are generating enough income in your personal life to take care of your lifestyle, why not do any additional investing in an account that's not paying taxes?
man, girl, ooh, girl. It's like, have you ever seen? And this is not me, like very curious. Like any situations where something was very fraudulent and you guys picked it up.
Yes, in cases where people want to do self-dealing. So they'll list, because if you're doing the investment with Horizon, we will have to review the paperwork before it's sent out. Now, as a custodian, because we're self-directed, we can't advise you. We can't say, yes, you can do this. No, you can't do that. But on our paperwork it's called a direction of investment form so that we know it's something that you fill out if you're investing directly from Horizon in your account here. Basically, there's there's 4 questions listed at the bottom of our forum that asks you about self-dealing. So it's either a yes or no checkbox. If you select yes for any of those questions, what happens is we won't send out your wire. We'll give you a call and figure out why you selected yes. And we do make the questions a little vague because we'd rather you be safe than sorry. But at that point, if we determine that what you're doing is prohibited, we let you know.
That makes sense. Okay, that terrified it. That made
So that's the other thing with the LLC is that, yes, it's a great option, but you want to make sure that what you're doing is allowed because there's nobody there to audit. Not that we're necessarily auditing either from the accounts, but the LLC even more so. What you do in that account is completely up to you. And if you do something you shouldn't do, that's completely on you.
that makes sense. Now this seems so good and all the good, the tax-free benefits, all that stuff. Are there any risks to investing with your retirement account?
Of course, there's always risk because at the end of the day, I mean, it depends on what you get invested in, but there's risk in everything that you do. Like I said, it seems so simple. It is that simple, but at the end of the day, the risk is involved with what you get invested in. So as long as you make sure you're doing your due diligence and not investing with people that are shady and that you have a secured loan, you should be fine.
Yeah, no, see, that's it, guys. It's like everything has risk. I think we talk about this on our podcast as well to a lot of persons, especially when lenders ask us, "Hey, can you guarantee that I'll get my money back in this time at this return?" I was like, "No, like I don't know what's going to happen in 6 months. If you want me to guarantee, then we're just not a good fit. But I'm not going to guarantee anything at all because it's just too risky for me to do that."
Right.
And one of my next questions is, and this is just for my benefit. Um, we're doing a fund. My partners and I are doing a fund, and I know our fund is going to be set up where you have to be accredited investors. How can you, let me get my question right. Let's say I have an investor, they're accredited, and they want to invest in my fund. Would it be the same process if they're lending? If not, what are the extra steps that are involved in that?
Yeah, it depends on the type of fund, I believe. I don't know the specifics about the funds and investing in them, but if it doesn't really matter whether or not you're a accredited investor on our end, so as long as they meet your requirements for the fund, you can send them over to us to help roll over funds from retirement accounts. As long as they have the accounts that qualify, we can assist them. It's really just something on your end that would be restricted, making sure they're qualified on your end. And if they are, then it's a seamless process on our end because we get involved with people with REITs all the time, funds and syndications. So a lot of people will even use this just to be able to raise capital for their clients.
And in that case, maybe if we don't have a debt that we're securing it against, we just use a promissory note.
Mhm.
Okay. Damn, that's simple. Thought it was gonna be super more technical.
Yeah, promissory note, or if it's a fund, it just depends on the type of fund because you will have specific documents, like a subscription agreement is sometimes required because they're showing, how many units they're purchasing and the price per unit. So it just depends on the fund specifically. But we can
Yeah.
work through that if you want to, on the back end.
Perfect. Guys, if you guys are finding this so valuable now, especially if you guys are rewatching this later, let us know what you guys think. If you found that this was like super good, you gain clarity as well. And one thing that we've done is if you guys have more questions or interested in setting up your account with Horizon Trust, we have a link that we're gonna drop in the chat. It will also be available when we send you guys a follow-up email for you to rewatch this video. And if you want to set up a call with Kelsey, there will be a link there as well. You guys can answer all the questions. She will break it down. So if your skull is as thick as mine, you would really understand and gain clarity for it. Because for me, like I can't just do it with the technical terms. And I would hear things for the first time and it's so overwhelming. I gotta hear it again and then I gotta go read, I gotta listen again. And I was like, okay, this makes sense. I'm able to explain it to someone. So that's how I know I understand it when I'm able to explain it to someone else. So if you guys have like any additional questions, like drop them in the chat. Let us know. I'm here thinking what else I can ask just to like dive in because you've answered a ton and I got clarity on a ton of stuff. Like look at Bex's face. She's like,
I know. I want to take full advantage for sure.
no, this is good. We hear it all the time. Like it's all over on the internet. Everyone tells you, like, invest in your retirement account. But I think it's just their approach is like, I don't want to tell you to invest with your retirement account. Yeah, you're here that you know you can, but I'd rather show you how
Mhm.
and share information on what the steps include, what to look out for, because that way now you get more clarity and it's easier for you to set up an account and you don't feel overwhelmed because the small things that people overlook is the small things that will help persons to make a final decision.
Exactly.
So you're like,
And that's why we have those one-on-one consultations. Everyone's situation is unique to themselves, and it's just really dependent on what you have, what qualifies, and we'll let you know during that phone call. We'll be able to determine whether or not what you have is something that you can use. And then at that point, you can determine whether or not it's worth it for you to roll over what you can. At the end of the day, it's people's retirement money. We're not saying set up the account, we want your account. We want you to set up the account if you want to set up the account.
yeah, yeah, that's it. I love how you said that. I love how you said that. You're not selling. And that's the thing. A lot of persons are always selling something. And the fact that you're just here, just sharing, like even for your time for being here and sharing stuff. Like remember when we suggested it to you, you're like, yeah, I'm down. Let's do it.
Yeah.
You didn't try to be like, I would love to sell a product and all that stuff. I want to talk about this. You're like, nope, I'm down. Tell me what you want me to talk about. Like,
Yeah.
that's it. So
You were automatically giving us like, wow, like things that we did not know, which was amazing.
Most people don't. I mean, the reason I'm so passionate about self-directing is because for me, first of all, like you mentioned earlier, I'm young, right? And I do know a lot about the industry, but a big pushing point for me is just being able to help people. For instance, my parents, they I want to do so much for them. I want to retire them. There's so many things that I want to do for them. And being in this industry has allowed me to be able to do something for them without necessarily retiring them. Like my father, he's older, he has retirement funds, and being in this industry has allowed me to help him grow his retirement funds because of the knowledge that I have just being here. And that's something that has positively affected my family and their financial situation as well. So, kids can just help their parents out. If they're involved in real estate, which so many people are involved in real estate, that's something small that you can do to help your parents' retirement account grow so they can retire sooner. They're just it's different for everyone, but that's one of my biggest, I guess, inspirations in being a part of the self-directed community.
That's your why.
Yeah. Exactly.
That is your why.
Question that you get a lot that we haven't asked.
What were you saying, Betsy?
What's a question that you get, Kelsey, that we haven't asked that it's pretty common?
I was actually surprised with the questions that you had for me. When you brought up UBIT, I was surprised that you even knew about that. So that was good. I think you guys went over everything. I mean, we went over the account types you can roll over. We went over system and processes, extensions of your accounts that you can have, contribution limits. I mean, at this point, it's really just speaking to people individually and knowing their personal situations to help them and give them a better insight on what they can do.
Yeah, that makes sense.
But this was definitely a good general overview. I mean, we went into, I think, a lot of detail.
That's amazing.
But before we wrap up, thank you so much. We really appreciate it a ton, and we look forward to working with you. Thank you guys for tuning in and watching and asking questions. I know some persons registered, but still was unable to make it because they just want access to the replay of it. And then we'll definitely send a follow up as well with you guys with the link so you guys can watch this again and let us know if you have questions. Remember, in that link, it will also have in that email, we'll also have a link for you to set up a meeting with Kelsey if you have additional questions about everything that was discussed.
And the link is there. It's in the comments right now. So if you guys want to go there, go ahead and save that for later. Yes, but thank you guys for being here. Your support means a lot. And also, you guys were able to ask questions that, was particular for you guys. So we really, really love that. We were able to provide that for you guys.
All right. Thank you so much, Kelsey. We appreciate it. And everyone, thank you guys for tuning in. And we'll see you guys next time.
Thank you, guys. Thank you for having me on your podcast.
All right. Of course. Thank you. See you.
Bye, guys.